Today we're diving into SCHD, our first ETF. What SCHD is and how it works. SCHD is an exchange-traded fund that tracks the Dow Jones U.S. Dividend 100 Index. That underlying index looks for U.S. companies with at least 10 consecutive years of dividend payments, then scores them on quality metrics: free cash flow to debt, return on equity, dividend yield, and 5-year dividend growth. So SCHD is meant to be a dividend plus quality play, not just the highest yield, but companies that have shown consistency and financial strength. It offers a trailing 12-month yield around approximately 3.8% as of recent reports. Since inception, it has delivered long-term total returns in the ballpark of approximately 11 to 13% annually, depending on time frame, including dividends. How Wall Street and analysts view it. Analyst consensus on SCHD is moderately positive. On one hand, it carries a moderate buy rating according to aggregate data, with many buy and hold ratings. One article describes SCHD as a no-brainer for risk-aware investors seeking income and quality. On the flip side, SCHD has faced recent headwinds. Articles highlight its underperformance relative to peers over the past few years. For example, one note said SCHD has been one of the worst-performing dividend ETFs in 2025 and the past 3 years. Another pointed out that many of its holdings are in more cyclical sectors and might struggle in a recessionary environment. So the narrative? Good long-term credentials, but short-term performance and sector concentration risks are raising questions. Outlook for the next 5 years. Here's where you can frame the story for your audience. 1. Base case: moderate growth plus dividend stability. Given its quality screening and steady yield, one could reasonably expect SCHD to deliver something like approximately 8 to 10% annualized total return over 5 years, combining dividend yield plus modest capital growth. The yield of approximately 3.8% acts as a floor, and if the portfolio companies grow dividends and earnings, price appreciation could add a few extra percentage points. 2. Optimistic scenario. In a favorable macro environment, moderate economic growth, low inflation, stable interest rates, SCHD could outperform, perhaps reaching approximately 12 to 15% annualized, thanks to dividend growth, buybacks, and investor rotation toward income quality. Some bullish commentary suggests 20% plus in certain years for SCHD,